Good morning, grade 11s. Welcome back. Today we're going to look at the last part of acquiring businesses or avenues of acquiring businesses. Now, you'll recall from our previous sessions that we've looked at franchising as an option of acquiring a business, and then we look at outsourcing. Actually, when you have a business already, but certain functions of that business you are letting outside businesses perform on your behalf, so that you can focus on your core business expertise. Today we're going to then look at leasing, and that's the last part of avenues of acquiring businesses. So that's on page 7 of your notes of chapter 6, so you can find it there. Perhaps have it with you if possible, because when we look at the advantages and disadvantages of leasing, the notes of the department actually give the advantages for the lessee as well as the lessor in one, and maybe you can just indicate which one is which, and after that you can make yourself some comparative columns or tables. Right, so what is the meaning of leasing? And you've done this in grade 10 as well, so we are just quickly recapping from grade 10. This is the method whereby a business pays for the use of an asset, for example, equipment, land, material, etc. So as a business, you will not own that specific asset or type of equipment, but you will pay for the use of that. And my ever popular example would that be of your office photocopy machine. We spoke about it last year where we said it's extremely expensive to actually go and buy one of those photocopiers, but many businesses do need it for their day-to-day administration, but therefore there are other businesses that are leasing or renting out those type of photostat machines, so you can sign a contract and then make use of that machine. So you can write for yourself photocopier machine. There's others as well, and we'll look at a few examples down here just now. Now, very important, the business or the person who owns the asset that you as the business will be renting it from is called the lessor. So the other company or business who owns that asset and is renting or leasing it to you is called the lessor. Then you as the business will be the lessee in this relationship. You are going to use the asset, but for that privilege to use the asset, you will pay a fee, and that will be the leasing fee. The lessor will make the asset available to the lessee who leases, just fix that for us, who leases the asset in return for an agreed amount called leasing charges or the leasing fee. The leasing fee usually includes a maintenance fee and insurance fee. Now, what does that mean? A maintenance fee means that normally when you sign a contract, if we use the photocopier as an example, they will include some conditions. For example, it includes a call-out fee 3 or 4 times a month, let's say maximum an hour. So if you are now working on the photocopier and then something goes wrong, paper gets stuck and you can't fix it, you can call out the business, the lessor, or normally a technician who's working on behalf of that business, and they will come out and fix it for you. They normally specify a certain amount of time or number of call outs that's included in the agreement. Then also, either you'll have to take out insurance upon signing this lease agreement with the lessor, or you'll have to prove that you've got insurance that will cover any damages to the specific machine or equipment or whatever you are leasing. The reason for that is because you are not the owner of this asset. If something goes wrong while you are using it, it needs to be replaced. So either the lessor will ask you to take out insurance, or the lessor will have insurance on their behalf with a specific insurance company. But that will be specified and stipulated in the lease agreement, and you have to make sure about that and familiarize yourself with the terms and conditions, obviously, before you sign such a contract, because it's binding. and it's normally for a longer, a longish period of time, a year or 2 years. So it is important to make sure that you know what is stipulated in that contract. Right. The lessor has to repair or replace the asset if needed. So let's say something goes wrong, and we know with these photostat machines, there's lots of moving parts, there's trays on the one side. If anything goes wrong, usually it will be the responsibility of the lessor to replace it or fix it, unless they can perhaps prove that the specific piece of equipment was not handled with care, and then it will be maybe for the lessee's account, but that should also be stipulated in the agreement. Then this is a method that gives, please add in there for us, that gives businesses the option of obtaining the use of an asset for a certain period instead of buying the asset. Many small businesses just don't have the financial means to go and buy expensive assets, but they desperately need to use it in the business environment in order for the business to run properly. So leasing is a popular way of actually getting the use and being able to use that asset, but you are only renting it or paying for the use of that over a period of time. Now, here's a few examples. We spoke about office equipment. You can also lease vehicles. Many people and businesses who have bought a vehicle on hire purchase, in effect, are leasing the vehicle, because at the end of the period, sometimes 4 or 5 years, there's a balloon payment left, and most people, if they buy a car, just don't have that balloon payment of 30%, sometimes even 40% of the value of the purchase price of a vehicle left. So what do? In essence, they are basically renting or leasing the vehicle for that period of time. By the end of that 4 or 5 years, then instead of buying the car, they give the car back and they buy a new car, which they then are leasing for the next couple of years. So that's actually what many people do when they have bought a car on a hire purchase agreement. Then if you maybe have to use trailers as a transport method in your business, you can do that on a leasing agreement. Any type of machines, machinery, expensive equipment that you need to use in your business. And then something quite interesting, clothing rental businesses. There I'm thinking of these businesses that rent out clothes if you have to dress up for a party. Obviously, you use it for that period of time, you're renting it, but then, okay, in this case, you are returning it unless you're borrowing it or using it for a long period of time. Okay. Advantages of leasing for the lessor. I just want you to add the and lessee, and let's just see which one applies to which. The first one, leasing improves the cash flow of the business. That would be for the lessee. So obviously, because you as the business owner do not have to dish out a lot of money upfront to buy an expensive asset or equipment, a piece of equipment, it definitely does improve your cash flow so that you don't have to pay out that much money all in one go. Leasing is regarded as an expense for the lessee and is therefore not regarded as debt. So in the books of the business, if we look at the financials as they speak, then an expense reflects a bit better than having a lot of debt reflected on your books, because you've maybe gone into a contract and bought something on account or on credit and you owe that money. An expense reflects slightly better than the debt in the books of your business. So that is also for the lessee an advantage. The lessor receives a continual rental income. So that means if you are the owner of, let's say, this morning I'm really up for a nice cup of coffee. These coffee machines, those vending machines. Many businesses install them or have them in their offices, but it's not theirs. They are basically leasing it from a specific business that does the renting out of these machines. So for the lessor, if that's your business, it ensures money or cash coming in on a monthly basis because other businesses are renting or leasing your equipment from you or your assets from you. So that's an advantage for the lessor. The lessor can get quantity discount by buying goods in bulk to supply various lessees. So if I have a business where I'm supplying these coffee machines to many other businesses, if I go to the manufacturer or the wholesaler to say, listen, I want to buy 10 of these machines, you could get it, or I will get it at a much better price than one business approaching the manufacturer or the wholesaler to only buy one machine. And that can also be, benefit can also be passed on to the lessees in a smaller way. So that is definitely an advantage for the lessor. Then there's a repeat of the continual rental income. You can take that one out for us. So I'm going to do it with you. The asset can be returned to the lessor when it's no longer needed. So this is a nice advantage for the lessee. So let's say your photocopy machine is now not what you need anymore. You either need to, you want to downscale. Maybe it was a full color copier, but you saw that it's not really worthwhile to make color photocopies, and you are just fine with making black and white copies, then you can return it, obviously within the contractual parameters, but then it means you are not sitting with that asset. You can return it to the lessor. So definitely an advantage for the lessee. Makes budgeting and planning easier, and it provides better control over cash flow. That ties in with the very first bullet, so that's also an advantage for the lessee. So you know that every month we have to pay this amount over to the lessor for the use of this specific machine, and you can budget for that. Because maintenance and insurance is also included usually in your contract, you normally won't get these nasty surprises of things breaking down and then you having to repair it. It retains ownership of the asset, which can be sold to recover money at the end of the lease. This is an advantage for the lessor. So although somebody is using it, it stays your asset if you are the business providing these assets to other businesses on a lease agreement. So it stays your asset, and at the end you can still sell it if you wanted to recover some money in some or other form. There is no large financial outlay as the cost is spread over a number of months or years. That is an advantage for the lessee. So as we said in the beginning, you don't have to go out and dish out a couple of probably hundreds of thousands of rands to buy one of these big photocopy machines. You could spread that expense over a number of months for the duration of the lease contract. The lessor normally covers the maintenance, replaces any damaged part or equipment. So that is again a nice advantage for the lessee. So if you're the business owner renting or leasing from another business, then it means, like I said, you don't get those nasty surprises with things breaking down. There are tax advantages as rental payment are calculated as operating costs and are therefore tax deductible. Because it's an expense that you will be showing in the books of your business, it actually makes your profit less, and therefore you will pay less tax because you are paying that expense every month. So once again, an advantage for the lessee. It is easy to lease a better or newer version of the product without the capital outlay. So it can also go the other way. Maybe you've been renting a photocopier that's just making black and white copies, and now you realize, but I need one with more functionality. I want a machine that can staple documents, color, etc. Normally, the lessor would be quite happy for you or to adjust the contract, the lease agreement, and supply you with a new machine and take back the old one. I've actually, when I had a business, we had the exact same one. We returned our black and white copiers, and then we received color ones, upgraded ones, and then we just signed a new agreement that was then running for the next 24 months or whatever the case might be. What are the disadvantages of leasing? Once again, it will be for the lessor and lessee. and please indicate as we go along. The lessee does not own the asset. So although it's there by you, it never becomes yours. So you pay for it, for the use of it every month, but at no stage does that asset become yours, and therefore it's an expense, but at the end you can't show anything for it. So that would be a disadvantage for the lessee. It's the same with rent. You're using a premises, but at the end, let's say you've been renting for 5 years, there's nothing you can show for it. You haven't paid off on an asset. You basically just paid expenses or manage that expense every month. The lessor has control over the financial obligation of the lessee. So what that means is, obviously, you have a contractual, as the lessee, you have a contract or a contractual agreement with the lessor, and therefore you have a financial obligation. So if you do not pay, the lessor can take steps to either liquidate you at the end if it gets that bad, or it can result in your business getting a bad credit record, which obviously will be negatively affect your business in the future. So that would be a disadvantage for that lessee. But obviously, how can I say, if you take out or sign an agreement, it's your responsibility to pay that amount every month. Some leases require the lessee to maintain and repair the asset. So if it's not stipulated in the agreement that the lessor will pay for maintenance, insurance, etc., that will be for the lessee's account. So that's why I said in the beginning, very important that you read your contracts very, very carefully before signing, and making sure that you know who will be responsible for repairs if something goes wrong. A large amount of money is spent on an asset every month, the total of which is a lot more than what the asset is worth. That is, in some cases, I would say this would be a disadvantage for the lessee. If I can use an example to explain it to you here. If you buy a car, but in fact you are leasing it. You're paying much more for that car over the number of years that you are using that car than what you actually would have paid if you paid cash for it. The whole purchase price in one. The problem is in our daily lives that most people can't afford to just put that amount of money down, or just don't have that amount of cash lying around. But this would be a disadvantage for the lessee. So if you had the cash available, you probably would have paid much less for that item in one go. Right. Maintenance agreements are usually expensive and non-negotiable. That would be a disadvantage for the lessee. But again, I think most lessors and businesses that are providing these this service and the assets to be leased from them, I think are open for negotiation. So, and if you are not feeling comfortable with this agreement, then you go and look for one that makes more sense to you and does make you feel more comfortable and is maybe not that expensive. You, as the business owner, do have the right to shop around, if we can put it in that way. The agreement cannot be ended without a penalty. So let's say something happens. Now you have to close your business, maybe you get sick and you want to maybe go on early retirement or whatever the case might be, but you still have some time left on that contract. In most cases, they will find a way for you to end the contract early, but you will have to pay a penalty. So that will be some percentage of the agreement or a specific amount, depending on how many months are still left of the agreement. So unfortunately, that will be a disadvantage for the lessee. The lessee is responsible for maintenance even though they do not own the item. Please add for me, if stipulated in the contract. As we said, in many cases, the lessor takes responsibility for the maintenance of that asset. So it would be a disadvantage for the lessee if stipulated in the contract. Right, the total monthly cost can be increased, and sometimes they do stipulate, or it's stipulated in the contract, that after a year there will be an increase of 5% or 10%. But once again, please read the contracts carefully. If it is a fixed amount, then the lessor can't just go from his side and increase the monthly amount. There's no way that they can do it because you've signed a contract. So this would be a disadvantage, pardon, for the lessee. The lessor may not be able to sell the asset after the lease if it has not been kept in good condition. This will be a disadvantage for the lessor. So obviously also these things, especially your expensive equipment and machinery, have a lot to do with technology. So if the lessor now gets, let's say, that photocopier back after 2 years, obviously it's old in comparison with newer models that have come out. So the lessor might find it difficult to sell at a good price. And unfortunately, in some cases, the lessees are not looking after the assets and maintaining them well because they know it's not their property or their assets. So it might be difficult for the lessor to get a good price when trying to sell that asset afterwards. The lessor is committed to the contract and may not reclaim the asset before the lease expires. So this would be a disadvantage for the lessor. What that means is if you are the lessor and you are leasing out a specific asset or a piece of equipment, you can't just also go and say, no, I want it back because I want to sell it, I have a cash flow problem. Once again, I think people are human, and if you approach the lessee, maybe you can come to an agreement, but as the contract stipulated and stipulates, you have to leave that asset with the lessee for the agreed period of time. So that might be a disadvantage for the lessor. The lessee is committed to the contract and may have to pay for the lease even if they have no further use for the item. Business operations change, situations change, and you might have now, let's say you had a huge complement of staff, you've put in that nice coffee machine because the people were using it, but you had to downscale. Now there's very few people using the coffee machine, or none of them. You have to sit it out of that contract for that period of time, and you might not have any use for that coffee machine any longer. So that would be a disadvantage for the lessee. Right. Let's move on to the next page. So that is then the end of the advantages and disadvantages for the lessor as well as for the lessee. Let's quickly have a look at contractual implications of leasing. That's now got to do with the drawing up and the signing of the lease agreement or the lease contract. The lease agreement will indicate whether the lessee becomes the owner of the asset after the lease period for a fee or not. That can be stipulated. In most cases with office equipment and so on, that would not be the case. I think this will apply more to when you buy a car, but obviously it will stipulate that balloon payment, that big amount that needs to be paid at the end. The following details must be stated on the lease agreement: the names of the parties entering the lease agreement or the contract, so the businesses' names. If, for example, you have a sole trading business or you're in a partnership, then obviously the business can't enter into the contract. Then you as the partners or the owners will have to enter into that specific contract. The duration or the period of the lease, so how long is it going to be? Some clauses or contracts also stipulate that, let's say, the initial period of the contract is for 2 years, and then thereafter you can rent it or lease it on a month-to-month basis. So that means you don't enter into a new contract, but the contract will only then come to an end if you as the lessee say, okay, by the end of next month I want to terminate the contract. Normally you are required to give 30 days notice as with standard contracts. The detailed description of what is being leased, so the model number or the type of equipment, machinery, it must be properly described. The conditions of renewal, as I said, what happens after the initial period of time that's stipulated in the contract, what options are there to keep on using that asset, under what conditions, amounts, and so on. The monthly amount payable, that's very important. Any conditions such as deposits, insurance, and security. So there the lessor can perhaps indicate that if the lessee has its own insurance, proof of that needs to be given to the lessor. Details of how the installment will be calculated, they basically just say what the monthly amount is and what does it include. Any specific conditions for renewing the lease at the end of the contract period, that ties in with one of our previous bullets. The procedure and liability for legal costs if a dispute arises. So there it will be stipulated if either parties do not honor the contract, what will happen, what legal procedures will be followed. The procedure, if the lessor or lessee becomes insolvent, that needs to be stipulated, but it also ties in with the previous point, what legal routes will then be taken. Then the details of insurance, maintenance, restrictive use. What is restrictive use? I mean, you can't use the photocopier as a storing device, and putting lots of books or whatever on it, or heavy other heavy things. It must be used for the intention that it was manufactured for. Any upfront payments, maybe you need to pay one installment before they will deliver or income and install your equipment. So all of those details will be stipulated in the lease agreement. Okay. Here's an example that you can work through where you'll see how it's normally done. There's a little case study, and from the case study, you have to identify, in this case, different avenues of acquiring businesses. Grade 11, what I'd like you to do is in your exercise books, go for me and just split this up. Also for yourself, for when you study for the test or exams, that I think make a table where you have advantages and disadvantages for the lessor, and as advantages and disadvantages for the lessee from 2.3.2, and you can split it up for yourself. All right, so that brings us to the end of ways of acquiring businesses. So we've looked at franchising, we looked at outsourcing, and finally at leasing. So I hope this makes a bit more sense, and it will help you in preparing well for your test and exams. Have a wonderful day.